January to June, to the end of June. I'll show you that on my 4-hourly chart. I'm just trying to break this down for you. And if truly, let me give you something else to take on today. You see this rally you are seeing here, this is an uptrend. That tells you that the market is still on the high rise. But after a break of structure, if you are seeing baby candles coming down, that tells you that this was never a change of character to the upside. But when you start seeing from all the way from 30th of May 2022, you saw the whole 1 year, US oil was struggling and there were no supplies. That's to tell you that a lot, it might be take profit or a retracement. I call this a retracement because the momentum it was using to come down was still very, very sluggish. They were still biased economic activities. This weekly, week 1 week, you've seen the candles very, 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 when you go here, first consolidated between December all the way to March before we came down to the main support consolidated. So let me just say the consolidated started from December of 2022 all the way to June of 2023. So right now, this higher demand new that is coming out right now, is it taking us to the new, what's it called? The new area of value of 140. That's what we're about to find out, because once this market switch to the upside on our lower time frame, we'll enter and what we'll do at VisionX without a switch back to the upside or you change your character back to the upside and a retest, we take conservative entry. Those are the criteria we use. So we first of all look up to like 5 to 6 confluences, and lastly find a switch, if at least on the 4-hourly chart, before we can start trading. We don't trade 1 hour switches. We trade higher time frame switches to the upside, or we call it a change of character, whatever it might be. So since we had that the market was coming down to a particular area of value and the buying momentum was rising, which is a signal again, which is a divergence, which has given us up to like breaking out from an ascending triangle 1, changing character to the upside 2, coming back to the previous broken structure to find a support at this area of value 3, then divergence happening where the price was coming down and buying momentum was going up 4, then we're about having a change of character or probably change of character 5. So those 5 conferences are enough. So I'll leave the weekly, take this off, and go into it properly to see whatever is happening. So we can't use the weekly to see whatever is happening right now. We have to go to the lower time for probably the 1 hour time frame. You can see that this market was doing well, trending properly to the downside. So we are still in a bearish breaking structure. So if you've been holding or you've been trading this, you would have been making money on a downtrend before getting to a particular area of value, which is a support. Turn to on that support and you can see all the bounces happening. So what has been happening, if the daily is not giving you, don't drop less than the 4-hourly chart. So that's what I'll tell you. So I'll drop my 4-hourly chart, which I use in trending my market properly well. And what can you see? The last area of value we had on that 4-hourly chart was this supply. Was this area of supply support that broke and turned into a resistance. So as you can see, look at, as you can see, what have you seen now? So I told my students, I think in the month of May, that the difference between the upside and the downside right now from demand of crude oil going up is this consolidation that's been happening. So this is the reason why we've not been trading crude oil, because we don't know what's happening. So you can see that in the month of June 29th, about 15 days ago, that was when this demand started coming out from crude oil. So if you were a US oil trader, you would have seen that there were demand, what's it called, support around these areas. So you should be looking for a bounce from this area. If you have been buying from $66 area, you would have been able to cash these 1,000 pips. It's gone up to the upside right now. It's 1,000, 10,000 pips. Let me see how many pips. 66. 66 to 76. We are right now. If you have bought 1 barrel or 1 lot, you have made $10,000. So that is 10,000 pips to the upside. Is it 10,000 pips? No, don't mind me. Sorry, let me check this calculation sometimes. That's 1,000 pips because one movement is $1,000. So that's 1,000 pips. So that's 10,000 pips to $76, right? That's 10,000 pips to $26, which is $10,000 if you hold one barrel or one lot on crude oil. So if I go back to my crude oil right now to finish this video, you see that you have to do, if you do a proper analysis and a proper research on your asset, you will definitely make that asset. So we have 5 confluences already. Are you getting it? And the 6th confluence is that this was previous support when we were coming down. It turned into resistance, 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 resistance that would not broken out from. So hence that is making up coming back to 72 or 74 or from 72 to $74, and we're finding on that switch again, probably on the 1 hour time frame. Buy, put our stop loss under, probably take a $3,000 if we're using one lot, trading, probably using a $5,000 stop loss, then aiming all the way from 70, let me just say 74 conservatively or 75 conservatively, all the way to, I don't care how long it's going to take, but it depends on how long we're going to hold, all the way back to the 100 previous high, which is if I go to my previous high of $120. So if you are to bring this here right now and say that taking a trade from $75 to $120, so and if we're taking from $75 entry price, $75, then profit target $120, then our stop loss, sorry, 120. Hold on. 20 as our profit target, then our stop loss will be, so if we're risking 70, okay, let's go 70. Stop loss will be 70, that's we're risking 5,000 pips. I guess in our risk will be 9. How? Because we are about making about how many thousand pips if we are to, as investors at VisionX, we are mostly investors. That's why we take longer time to make profit. But just imagine that we're investing $75 all the way to our next high, and it takes us even 6 months to $120. One lot we're buying and holding 1 barrel of crude oil for that long is $45,000. If we're able to buy up to 10 barrels and hold it for as long as we can, it's $450,000. So this is how I trade the financial markets at VisionX Limited. So from here right now, if truly this is gonna, this is gonna continue, and as you can see, this is a very, very, very big height I want oil to break, because right now we're the internal. So my first take profit will be from 75 all the way to 3,000 pips. So if I'm holding, first of all, I might first of all take this trade from 75 to 83 or 82. First of all, $70,000 with 10 load, then I can leave the rest to run to the new all-time high. Depends. So you should be watching your markets, your demands, your supplies, any news that is coming out, your crude oil inventories, follow your economic calendars using investing.com, which is my preferred, or FS books. There are a lot of them that you can use. So if I have this right now, and I'm risking these 5,000 pips to make about 45,000 pips, that's a very good risk to reward ratio, even though it takes me 1 year, at least $150,000 in 1 year, or $45,000 in 1 year is very, 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 very good as an investor in this business. So this is what I have for you on US oil. So I'll still be on my 4-hourly chart, and I'll try to find out whatever is happening. So before going to my 4-hourly chart, I think I have something I need to look at on my daily chart. So on my daily chart, this, I have something I call connecting the dots. So when we broke and switched to the downside, hold on, when we broke structure and switched to the downside here, you know how we do it at VisionX. This was a previous high, support, turned what? A resistance. So I should know that for us to break all these support, previous resistance, now turn support, and break this support and break to the downside, the market will definitely would come and retest. And if you retest 2 times, restructure to the downside, this was your perfect entry, and this is your first entry, this is your second entry. This will tell you that the market has done what? A double top, and the market has done what? Switch to the downside. I usually tell my students this, that you should wait for confirmations first before you take any trade. Are you getting it? So the first confirmation we had was this switch to the downside. Are you getting it? So we broke to the downside, we came back twice, we couldn't break. So the market came, like what happened to you did, and made us lose that trade. Look at, are you getting it? I made us his stop loss. When it went up again, it broke down, switching character to back to the downside. So upon this retest, you should know that this market will definitely would on to the next major area of value at the downside. Are you getting it? So the market travels to resistance, travels to support. So if you know what you're doing, you should not be scared leaving your trades unless you're seeing that if you have entered this trade from here, your stop loss is here, it's not coming back to hit it anytime soon until we hit our major resistance and switch again like it's switching right now to come and hit it. So these are the 2 major levels I'll be looking out for. So let me take all this off. Let me tell you the major levels I'm looking out for in this chart. So I can bring that back. 2 major levels I'm looking out for is this one. This is the second one, but the first one will be a break above this high previous, what's it called? Previous resistance. We've broken this first one right now. I'll be glad if we can come and break $83 level. We test a particular place, then come back here, we test this particular, then break above and continue going. That's how the market will continue trending to the upside. If in case, I'm just saying in case, I'm not prone, I'm not, we do dubious speculations here also. I'm just saying in case. So in case that happens, watch out for you'll not start seeing, supply shorts, problems, economic problems, this, that coming out from data. There's no oil supplies, problems, this and that and that. You start hearing some kind of negative news that is making the demand for oil to go up. And sometimes I do feel like, do they even make all these things up? Or is it that, because how can you predict that this is going to go this way and it's going to go that way, and data that will be coming out will just be coming out so too negative. So it depends. So this is even too much. This 5,000 pips is too much. Sorry, trying to take all these guys in. Hold on, I'll take them off later after the video. So if I can reduce the, what's it called, maybe 2,000 pips, that will give us how many risk to reward? Probably 2,000 pips. I don't know. Depends. $14,000. So 14 point. Let me just say 2,000 pips. 70. That's 15 risk to reward ratio. So if you put $10,000 into this, you are expecting at least $150,000 back. So it depends on how much you are putting as 15 risk to reward ratio. It happens because if this market is reversing from here, unless we are coming back here to find that resistance you saw, unless we are coming here to find resistance, and if I should bring something up again to show you something, you'll be shocked. It will be, that place is 0.5. That place is definitely 0.5. See how accurate? Exactly 0.5. So if we're going to break above, see how accurate this market is. Now 0.5. How accurate? I didn't even check it up. I know that's accurate. This market will travel all the way to probably $93. I get it before, even coming to even break down. So we have a trade. So you don't even need to take to 120. We have a trade. How? Because if we're coming back to retest this particular structure, know that we're coming to $93 or $94. What's it called? US oil before even finding a way to either break up or break down. So we have a trade. So my trade right now will be from $75 to $95. So I have a trade, $95. I'm sure of this trade right now. Come back 1 or 2 months from now, you will see this if you are taking this. So we'll have a trade on US oil. So this is what I want to talk about today, because the demand is going to go up until probably we get to 0.5. You can see this market never lies. It's you that you are the one not analyzing this market correctly, probably to your favor. Because from what you are seeing here right now, these values, Fibonacci retracement, is just one kind of a tool that gives accuracy in this market. The accuracy of Fibonacci is just too much. Are you getting it? Because if you see, this was where I was trying to go back to the 4-hourly chart to show you something. This was where the market actually did what broke out from. Are you getting it? It was where the market actually did what broke out from. So are you trying to tell me that they knew that this area was 0.5 before we even got to 0.1? Then on the monthly, what can you see? On the monthly, let's go back to the monthly. The higher time frame, what's it called, is more than the lower time frame. So on the monthly, let me take this off. On the monthly, this market is even telling you that I'm going back up. If I switch character to the upside, breaking out of this ascending triangle, descending triangle, and stopping at 0.5, use a Fibonacci trend extension to take this off. I'll tell you that US oil for the next 1 year or 2 years might be on a bull run if it continues like this. So look at, where do I usually tell you my first take profit comes at? 0.618, which perfectly aligns with this $145 area. So if I'm entering $75, I'm taking it to $145, even 1 barrel oil is $70,000. 10 barrels is how many? $700,000. So I'm talking to all investors. This is how you look at the market. I just wanted to do this for you, and how I use my fundamentals, my sentiment analysis, and all these news coming out from, without emotions, all these news coming out from putting one and one together to trade this financial market. This is money. This is money. $700,000 in the Nigerian economy, which if we use how much we can, that can buy us 10 barrels of oil. How much can buy us 10 barrels of oil? XTI. How much can buy us 10 barrels? 1 barrel of oil right now is $766. You need to have at least $7,066 to take this trip. Probably risking $2,000 out of that $7,000. Are you getting it? To make about $70,000. How many? Less than 1 year it might happen. Are you getting it? You are risking $2,000 out of your $7,000, which is 10%. This is 10%, right? Out of your $7,000, you are risking up to like 30%. As an investor, not a trader, as an investor, see how much you are risking. Probably, that's why I say that is not. If you apply risk and money management and you are supposed to risk 5% of your capital, that means you are supposed to have $100,000 capital. Are you getting it? To 5% of that money is $5,000. You're not even risking up to $5,000. So let's say $50,000. 10% of that money is. So sorry, what did I just say? 10% of $5,000 is $10,000. 5% is $5,000. You're not risking up to $5,000. You're risking $2,500. So you're supposed to have a capital of $50,000. Risk 5% of that $50,000. In case it fails, you can take on that long swing trade. Are you getting it? So you are risking just $2,000 to $50,000. That's just $2,500. That's just how many? What's it called? That's just about many percent. 2,500 divided by 50,000. That's 0.05. That's 5%. 5%, yes, 2,500. That's 5%. Have a $50,000 account. Take a one lot 1 year later, you make that's over 100%. No insurance company will give you that. No bank will give you that in interest. Are you getting on your money you invested with them? So invest in yourself, invest wisely. Risk $2,500 out of $50,000, or risk $250 out of your $5,000 to make about. If you're making $70,000 on one lot, you should be making $7,500 on 0.1 lot, which is $5,000. As an investor, you should know that you should be able to get your hands on at least $5,000, risking just $50,000 to make at least risking $50,000 to make $750 or something like that. That is how it works. So this is what I have for you on US Oil right now. So what I'll be looking out for right now, if I should do a quick recap, is let me do a quick recap. Let me go back and do a quick recap. So on my I want my 4 hourly chart. So on my 4 hourly chart on the mini short term, right now, if I should take all these Fibonacci trend extensions and the rest of them, on the immediate short term, I'm waiting for a retest. If I should take this off also, I'm waiting for a retest of this consolidation break that we've broken out. So I've been waiting for this break to break out. Hence, that is making us retest, and we are not breaking it, and also switching probably on the 15 or 30 minutes or 1 hour time frame. I'm seeing a switch enter. So first take profit will be 88, 83 or $82, $83 conservatively, and second take profit will be $95. Before probably coming back to $83, we're not breaking it, they will take it to $125. That is the swing I'm expecting, or the position trade I'm expecting on US oil any moment from now. So I'll be uploading this video for anyone that cares to, use this to add to user analysis. You can do your own research. This is my research I've done right now, and these are every asset I want to trade. So I'm a long-term trader. I'm not a greedy one. I don't care how long it takes. I'm building my future, and I don't want all those things that make me rush into, as not even rush. Don't let me use that word rush. I don't want anything that I will do that I will blow up my capital. I will not have money to take on this. Because sleep and wake up, sleep and wake up. We are in July already. January, we started this journey of uploading videos and to going professionally to see how we can build our future. Life is a marathon race. Don't run a sprint race of 100 kilometers per hour, get tired and fall off. You might die along the line. I guess it, because if you take things little by little, observing proper risk and money management. I was talking about $50,000 right now. Some people will say that, oh, let me raise $20,000 and just this analysis is too perfect. I raise $20,000, I can make $1 million. It's possible. But what if you get taken out? What if this supply is just overnight spring up? You get taken out, you lose $20,000 out of $50,000. You now start reducing your risk from probably the 20 lots you used before to maybe 0.5 lots. How long will it take you to make your $20,000 back before you now start entering profit? Now you make your $50,000 back again. You take on that risk. Before you know, time is gone. So use proper risk and money management. That's the best advice I'll give to you. Proper risk and money management. Know what you're doing. Then if you want to day trade this, if I'm you trading oil, look at it's there for you. Go to the lower time frames. Look at what is this? Double bottom. Market broke out of back into these what's it called, supports. We tested it again, and it has been uptrend ever since. Look at uptrend. So if you've been taking all these if you have been taking all these trades, look at after this retest, enter, take profit, come back again to this demand zone. You found demand. Look at, take it again to the next. Fibonacci is there to help you. Look at. Fibonacci is there to help you. Take profit here again. wait for a retest. So this market has been what? Trending on the 1 hourly time frame perfectly well. Look at now. It has been trending perfectly well. So we are seeing an uptrend. So I'm waiting for either a switch to the downside, and I can even take a trade. How? Because the moment we are breaking this to the downside, I guess it's switching to the downside again. Break the switch, retest, take a conservative sell from $76, sell it down to $74, 200 p 2000 pips. This is a trade again. Breaking it down, retesting, or coming back to, I'll show you something else. There was something I was supposed to show you from the beginning. I didn't show you, connecting the dots. How? This was where it all started from. Just connect the first dot, extend it. You see that the market has been very, very perfect. So we are approaching this area that might take us to $74 before breaking it again. Now look at what has the market been using since the monthly time frame. A descending triangle is there. It's not, it will only show you a descending triangle. It wants to still use that same descending triangle again on the daily right now again. A smaller one. A daily right now again. So the moment we are breaking out to $83, retesting, I need to drive this properly for you. How do you trend your market? How do you trend your market? First of all, if that's a breakout, we know we don't go 0.3, and this is the way we're coming back. We're coming back to 0.370, 3.46 or 73.5, $74, $75 conservatively. And the moment we're breaking out, we'll switch to the upside. So retesting, you enter from the fourth Elliott wave, then take it to the next one. So you enter from 73.5 all the way to $795. That is how the market works. So one, do proper training on how the market works before you can trade. Because if there's an Elliott wave, let me show you how Elliott wave works. 1, 2, 3 always break a structure. You know I usually say that. 4 comes back, does not break above 1, must not break below 1. 5, before you start seeing us doing what? An ABC move to the downside. A, B, C, we should usually break 3 a little. Then we'll start another Elliott wave again. 1, 2, 3 always break a structure. 4 cannot go below 1, or it might not even come near. Then 5, that's how the market will continue. 2 might even come down a bit, but does not break. Are you getting it? As long as it does not break below 0, that's 2. So the market will continue trending using this Elliott wave. Do you know how many pips is from year to year, from year to year, from year to year, from year to year, from year to year? So this is how I expect you to take your market, because the one, a lot of people don't get involved in one. People like me and you don't get involved in one. Yes, we usually wait for what? 4, because 4 is the best entry you can ever find in the market today, as long as it does not go below 1. 4 is the best entry. And I usually tell people, no matter how long it takes, wait for 4, because 4 is, one look for Elliott wave, and best traders of Elliott wave, they will tell you that wait for 4th leg and take the 5th leg, then take the ABC leg, then start your new Elliott wave. Then you know that you have a major support, then you have another Elliott wave coming up. And if you go to a weekly time frame, you will just see that this was just a proper way the market has been trending for you. Go to the 1 minute time frame, the 1 hour time frame analysis right now. Drive the Elliott wave. You see how we're able to do a 1, 2, 3, 4, 5 ABC 1, 2, 3, 4, 5 to get where we are now again. That's how the market works. I guess that's how the market works. Before you know it, we are here already. So the market moves in waves. You need to learn everything and how this market moves. Look at now. See this support I even drew at 63. This market might just come back here Are you getting it? This video is very vital. All these videos will blow up someday. I don't care doing them. I don't care how long it takes me doing them. Data I'm wasting, people not watching it. Someday, I believe a lot of people will do it. Find this interesting. Are you getting it? And use it as a way of getting more knowledge into yeah. So this is what I have for you. Oh no, well, this is a dubious speculation for now, but this is how I just want to tell you that this is how I look at my market and how I trend the financial market itself. So right now, if I should take all these guys off. Okay, sorry, let me take all these guys off now. This video is becoming too long. I should take all these guys off, or even take them off entirely because they're in the video already. Take them off entirely, and you see what are you seeing? This is another ascending triangle that if it breaks and retests, breaks and retests, continue going. This is how the market actually does work. So if you're a price action trader, if you're a short pattern trader, depending on your strategy, I've incorporated all the strategies, sentimental analysis, and what's it called? Fundamental analysis, technical analysis, more than 10 strategies in one place, more than 5 to 6 confluences that you ever learn from any mentor, anywhere, anytime, any day, in one place again. See resistance coming up here again. Many other things, support and resistance traders, you can even bring in your 20 EMA to see if it's corresponding. Look at my 20 EMA, we're looking above my 20 EMA right now. We break above it, we are on a rally. We break below it, we are down. We break above it, we are up again. Another strategy again, if you're an EMA trader, where if you bring your 20 EMA, 50 EMA to accompany it, you see that the market was in an uptrend. We broke here. This was a sell entry. Now, if we're breaking above again, where the 20 is crossing the 50 again, like it did here, we know that we are in under massive uptrend again. Once we are crossing, you know that you are in an uptrend, and you start seeing the 20 and the 50 coming with support. Now look at 20 and 50 becoming resistance. So there are a lot of strategies. Just come, let's work, let's grow, let's trade together. So I'm not going to counter trend this down to the downside. I don't think I'll be doing that counter trend again to the downside because the market might just continue expanding from today is Friday and the market is closing today. The market might just continue expanding to the upside. So when you follow the trend, you will not lose money. You know that you will not lose money, you will not lose much. So look at another formula I brought out right now. 20 and 50 EMA. When 20 is crossing the 50, bull run. When 20 is crossing the 50 to the downside, bear market, bull market. So what is your style of trading? What is your strategy? What have you found for yourself? Because if you, even though you are not a chartist, just 20 and 50 EMA, see what it's doing for you right now. Bear market until you break above it again, you leave. Before you leave, this is a lot of pips. From $41 till it broke below at $91. That's 50,000 pips. $50,000 on a one lot. 10 lots, $500,000. No matter how long it takes, it will not fail you. And why do you even let it go? You are 120 already. Why do you let it break below? The moment you are breaking below your 20 EMA, you should get curious and look at market structure, knowing that this is double top. Are you getting it? Anything that is making us break below that double top, that's as in to confirm a double top, we have to break below the previous high to confirm a double top. Break below it, test, and continue going down. What is your strategy? A lot of people have a lot of strategies, working, proven strategies, but they are impatient. They don't want to have wait for that time. They don't have that time to wait. They just want to make money every day. It does not work in this place. This is investing for you. Okay, so I will not say more than this. This is how I look at my market at Vision X. Little by little, we are growing, get there. We are not in competition with anybody. I don't intend to be in competition with anybody. This is my life. I know it's taking me a lot of time to bounce back because of what happened to me in my other businesses, but definitely We'll get it right someday. So this is what I have for now. And I'll be looking at this. I'll be driving the price action on this market and finding this particular resistance back to our 73, 74 area. I guess in it. And without a break of structure to the downside, even though you want to take a swing to the downside, without a change of character to the downside, breaking this previous high, I guess in it, breaking this previous 1 week low, retesting this particular 0.5 or 0.382, coming here to find entry for start going. I am not selling again. Okay, I'm not selling because the market might just come here and continue breaking this guide to the upside. So this is what I have for you. Don't look at your higher time frame. Use a lower time frame to drive the price action happening. If the 1 hour is too small for you, come to the 4 hourly. You can see all the price action happening. If that's too big, 30 minutes is there, 15 minutes is there for you to see what is really going on. You get me? And I'll tell you from today, if you are the one kind of person that loses money all the time because you're looking at lower time frame, stay on your 40 time frame. Trust me, no matter what the candles are doing, it will save you trading from those 4 hourly structures. So this is the best thing I can tell you for now. I'm not a financial advisor. This is how I just for this video is just for educational entertainment purpose and to document my journey as a trader. I guess me. So this is what I just have for you. So I advise that you trade responsibly and trade wisely. Yes, because you're right now, you can see our further structure, previous resistance. So we might just come back here, expand to $78 before falling down, continue. So trade your further structures and you only profitable. Take care and bye for now. Bye. Bye. Bye bye.